Oof, guys, talk about a rough day for the stock market today. We have a lot to cover in this video, from earnings to charts, my thoughts, what I'm looking to do with these stocks that just reported earnings, plus more. So hit the like button, guys. Make sure to subscribe and get your 10 fractional shares of the Mag 7 stocks for Moomoo using that link down below by checking out the QR code right here or by going to stocksurfs.com/Moomoo. Get your stocks, guys. All you have to do is open up your account and fund it with at least $100. And boom, you get those stocks. It's a no-brainer. So with that being said, cheers. Let me actually get my water. Cheers. There we go, guys. And let's dive right into the video. So at this point, you guys saw the entire stock market got destroyed today. And after the bell, it's not looking any better. We currently have SPY down to almost $500 flat after the bell, as it went down 1.6% on the day. And we had the Russell go down over 2% on the day. Now it's at 1,975 points, as Triple Q, or the NASDAQ 100, went down almost 2% on the day. Now it's down an additional, get this, guys, 1% after the bell. So in other words, we're almost down 3% on the NASDAQ 100 today, if you're including that after the bell move, which is nuts. And the Dow Jones is down 1.5% right now. And, well, not right now. It went down 1.5% on the day. And the VIX, the volatility index, went up almost 7%. You heard that right. So, yeah, pretty rocky day. A lot of red. Barely any stocks on my watch list went up on the day today. And, well, we got to talk about what's going on. So, clearly, now we're back under the moving averages on the Dow here on the 4-hour chart. And we have a death cross, by the way, here on the Dow, which we've seen that for the past couple of days here, where the 50 SMA is crossing under the 180 SMA. That's what a death cross is, guys, which that's a bearish sign. And we can see that on SPY, I believe, as well, right? Yeah, we've been seeing that. We have a death cross here. We got rejected at the 180 moving average, like I mentioned in my previous video. And it's the same thing here on Triple Q, right? Got rejected at a lower high at the 180 moving average. We have a death cross, right? So let's break down what is going on with these earnings, which obviously are sending the stock market down even more after the bell. So we have Amazon. Let me pull up Amazon here, guys. AMZN. I don't know why I just pulled up Apple. AMZN is the ticker for Amazon, for those of you guys that didn't know, right? And they just reported earnings, and the funny thing is their stock's actually up. So I'm not sure why the stock market's selling off so aggressively right now, but I guess Amazon's just one stock, right? But Amazon stock's up $5 after the bell, and at one point it was up to $186, which means it was up over $10 per share at one point, which is a pretty big move of around 6% here after the bell. So Amazon reported, let's see here, guys, GAAP EPS of 98 cents, which beat the 82 cents expected. Amazon reported sales of $143.3 billion, which also beat the $142.49 billion estimate, and they guided for Q2 sales of $144 to $149 billion. Not too sure what the estimate on that was, but that's their guidance for Q2 sales. And it looks like here, actually, no, the guidance is right here. $150 billion. Oh, wait a second. So it looks like Q2 net sales were under the guidance, guys. So let me say that one more time, guys. Q2 net sales guidance, $144 to $149 billion. That's what Amazon is seeing, but analysts have them doing $150 billion. So guidance is a little bit weak there, guys. And it looks like here AWS growth rate now at $100 billion annual revenue run rate, which is unfreaking believable, guys. Amazing. And it looks like here their international segment sales, $32 billion roughly. Product sales, $60.92 billion. Services sales, $82 billion for Amazon, which is unreal. Operating margin, 10.7%. All right, I'm loving it. So yeah, guys, it looks like now Amazon is approaching the highs from really about 2 weeks ago, not too long ago, about 3 weeks ago, right in that ballpark, right, where we hit $189 per share, which, by the way, that's the all-time high on the stock, right? If you guys remember, we hit roughly 185, 190 a couple of years ago, and we just barely took out that all-time high about 2-3 weeks ago, and now I'm looking to see maybe does this earnings report, or maybe in the next couple of weeks, do we start getting out of $200 or 190 into the 200s? That would obviously be ideal here for the bulls, but be very careful, guys, because we're not quite yet seeing the breakout fully, although I expect it to come. That's just me personally. And full disclosure, I'm long Amazon. I've mentioned this before. I got in the stock last year, 2023, in the beginning of the year in the $80, $90 level. That's where I started buying heavily, and well, look at where it's at now. We're crushing it, guys. So either way, whether it goes to 200, even if it goes down to 150, I'm still going to be doing great. And honestly, if it goes to 150, I might consider buying some shares. But hey, I'm going to set my alert at $190 per share. Mark is at or above to see maybe at some point next week, or not even next week, this week, tomorrow. Let's see if we test that point and maybe start breaking out. We shall see. But that's Amazon, AMZN. We also got earnings out of Advanced Micro Devices, and their stock's actually down about $10 after the bell, or $6 rather. Geez, my math is terrible today, guys. Oh man, it looks like here we are down to $153 per share. We closed at 158. I guess at one point we were down $10. We got down to 148. So initially when the numbers came out, guys, AMD stock fell 7%. Interesting. So let me see what they did here, guys. Looks like they did adjusted EPS of 62 cents, which beat the 61 cents expected, and sales also beat $5.47 billion versus $5.45 billion expected. So double beat out of AMD. It's got to be a guidance thing, right? Yup, there it is. They see Q2 revenue guidance of 5.4 to $6 billion, which is a pretty wide range, if you ask me, versus the $5.7 billion expected. So the guidance is pretty much right smack dab in the middle of, or the estimate rather, is right smack dab in the middle of the guidance range, but the 5.4 number is under, obviously, the estimate. Maybe that's why we are seeing a bit of a sell-off here. Looks like data center revenue went up 80% year over year. Client segment up 85%, which is insane. Gaming down almost 50%. Oh my goodness. Embedded revenue down 46%. That's a disaster. Looks like gaming revenue came in at $922 million. The estimate was for $943, so that segment missed. Embedded revenue missed as well, $846 versus the $918 million estimate, so that's not great. But it looks like data center revenue came in right in line with estimates at 2.3. Client revenue beat 1.4 versus 1.29 billion, so that's good. And man, I didn't realize, well, I did have an idea of how bad gaming revenue is going to be, but geez, 50%, man, that is rough. Obviously, the data center revenue is what's driving the growth for this company. Obviously, NVIDIA, all these other AI companies, right? So, yeah. AMD down big time, and well, not big time, but I guess overall it's down big time from the recent highs, and it looks like we do have a head and shoulders that played out now, and honestly, if this thing starts coming down lower hundreds, which to be honest, I doubt, but if it does, I might pick up some shares. Honestly, I might pick up some shares. Even here, I'm considering it after these earnings. I'm still considering it, right? I'm looking at AMD more as a trade, and I'm like, is this wave really done? I don't think so, man. I feel like AMD could be getting ready for another breakout, but we just got to give it time. Let's let the dust settle. And please, guys, do your own research. I'm not telling you what to do, of course. I'm kind of just thinking out loud here. But yeah, AMD is on the top of my watch list. We also got SMCI's earnings, which I'm sure you guys have heard about this one, right? Supermicro Computer. They reported earnings, and their stock looks like it's down about $30. So let's see what they did, guys. Looks like they did EPS. Where's it at? $6.56, okay, versus, actually, where the heck are the estimates here? Am I blind? I guess we're not seeing them here. Either way, EPS $6.56, revenue $3.85 billion, looks like adjusted EPS $6.65. What's the guidance looking like? That's pretty much all I care about with these AI companies, guys, whatever you want to call them, I guess AI companies. I want to see their guidance, because the second we start seeing guidance slashed, maybe it's not as good as, it was expected months ago, that's when we're going to see the stock prices really start to come down. which honestly, we have seen SMCI come down about $400 from the highs. All these other, not all of them, I guess Nvidia is still pretty close to all-time highs, but AMD's down, right? We just saw that one. So again, if the guidance gets cut over the next couple of quarters, right, it's going to be ugly. Let's see here, though. Looks like here, guides for Q4 EPS, $7.62 to $8.42 on sales of $5.1 to $5.5 billion. What are the estimates for that, though? Either way, looks like here they guide for full year EPS of $23 to $24, roughly on revenue of $14.7 to $15.1 billion. What do you guys think about that? Let me know your thoughts down below in the comments. And overall, I mean, look, we're still in a downwards channel on SMCI, so I'm being very careful with it, right? If I draw this out, you guys will be able to see, boom, we actually got rejected at the top of the channel post earnings today. So be careful with SMCI. Obviously, it could rebound. It's one of those stocks, but at this point, we're not seeing any signs of that quite yet. Now, Starbucks. I have not looked at these earnings yet or the chart, and I didn't look at Amazon or AMD or SMCI's earnings either, but I'm curious to see if Starbucks is falling even more, considering how much this stock has just been in the gutter recently. Let me actually pull it up and show you guys. Holy smokes. Oh my God. Look at that, guys. Starbucks is down another $10. Oh, wow. This is bad. And by the way, I'm not a shareholder. I used to be, sold out, made money. Haven't looked back since, and that was like, geez, 2-3 years ago. Now I sold out. Either way, Starbucks is down $10 from 88 to 78. It's down 12%. Holy smokes. And it looks like here the company reported EPS adjusted of 68 cents versus 79 cents expected, and sales missed as well, 8.6 versus 9.12 billion expected. Unbelievable, guys. Double miss for Starbucks. And I know there's a lot going on geopolitically, I believe, with Starbucks, which we're not going to get into in this video. But man, one thing just from my experience here, in my local area, Starbucks is not as good as it used to be. Don't get me wrong. When they make the coffee right, when they make it good, it's freaking good. But the thing is, the consistency sucks. The consistency's trash, right? I always used to say I'm going to Starbucks over Dunkin', because Dunkin', their consistency was horrible too, right? And Starbucks used to have great consistency, at least in my area, right? But now it's Starbucks is pretty much, I'm not trying to crap on Dunkin', but it's pretty much on the level of Dunkin' Donuts now. So, at this point, guys, these days, you know what I do? I don't buy coffee out. Literally, maybe once in a blue moon with my wife. All right, we're going out. We're doing errands. All right, maybe we'll go to Starbucks, get a coffee, whatever. But for the most part, what am I doing? I'm making coffee at home, and it's cheaper. You save money, and guess what? It's the same thing every freaking time. They can't screw it up. You cannot screw up your own coffee. Either way, that's a little side rant there on Starbucks, guys. Don't get me wrong. I still like Starbucks, but I don't go nearly as much as I used to. They screw my coffee up way too much, and my order is simple. That's the thing. It's simple. I'm not getting 3 pumps of vanilla brown sugar with 4 scoops of syrup, right? Foam on top, cold cream foam, right? I'm just getting a simple coffee, and they're screwing it up. Either way, enough of that, guys. Starbucks is getting derailed right now, down on the day. Missed on EPS revenue, and it looks like here Q2 global comparable store sales declined 4%. And let me see what else here, guys. Highly challenged quarter. We know that's for sure. And who knows? Maybe that's just my location when it comes to Starbucks being crap. But honestly, I've gone to many Starbucks in the area, and I've had that experience pretty much everywhere where it's inconsistent. Either way, guys, let me know your Starbucks experience, please, down below in the comments. I would really love to know, guys. And the last stock for this video is Pinterest, which I did peek at Pinterest before. I know this one's going up like crazy. PINS is up about 20%, right? Last I checked. Now 19%. Either way, pretty close. And after the bell, it got up to $42, which at one point it was up 25%. So Pinterest is exploding, and the company reported, let me see here, guys, -4 cents GAAP EPS, which beat the -9 cents expected. All right, sales 740 versus 699 million expected, double beat, and they see Q2 revenue of 835 to 850 million, which is a lot better than the estimate. This is guidance here, guys, of $826 million. So very good there from Pinterest, guys. And again, we're shooting off here like crazy, which, I mean, I've tracked Pinterest over the years. This stock and Snapchat, you guys know, well, maybe you don't. I'll tell you right now, these are very volatile during earnings. I mean, these moves right here, 20%, they don't surprise me at all. This happens literally every quarter in either direction for these, for these stocks, and, for a bunch of other ones as well. But, these in particular, Pinterest and Snapchat, I kind of look at those as, they are social media apps. I kind of look at them as discount social media apps because, let's be honest, not as many people, the big dogs obviously are Instagram, right? TikTok, and Facebook, YouTube, right? And then we have Snapchat and Pinterest. There's kind of a second tier list, which I would put Pinterest in. You guys know what I mean, right? Either way, this thing's moving big time. It looks like it's breaking out here on the 4-hour chart, which is great. And let's see if that continues. So what do you guys think? Let me know your thoughts in the comments. Hit the like button. Make sure to subscribe and check out the Patreon if you guys want to see me build out my Patreon portfolio, which is crushing it. That's linked down below. And you get access to the Discord chat, me throughout the day, my charts throughout the day, all that good stuff. I'm posting ideas on Patreon, guys. So make sure to join that link down below. Check out the QR code right here or go to StockSurfS.com/Patreon. And with that being said, cheers. I'll catch you guys in the next one.